Welcome to another VC Wisdom Pod. Today, Rob Hanna is with us. He is in venture investment and architecture. We're going to discuss about that. He is also into stakeholder value creation and capture. We're going to discuss about innovations, VC, impact investing, and so forth. I had a very nice pre-call with Rob that is also interested into doing a bit more podcast. Rob spent a past life on Wall Street. He's also a yogi, so it's a very nice hybrid, tribrid, santibrid guy with multiple colors. So quite interested to speak to him today. He just come back from a 3-day fast, which is quite heavy. Me and Rob have the same protocol. When we get sick, we fast. That's good advice for the immune system, that is. This podcast is brought to you by potfire.com. If you want to start, scale, or be invited to podcasts like this one, grow your sponsors, grow your community. Podcasts are just amazing. For that, podfire.com. Rob, can you say a little hello? Tell us a bit more about yourself and about your companies.
Yeah. Hey, a little hello to everybody out there. I am excited to be here. Thank you so much, Charles, for being generous and bringing me on. I think this is fun. I really enjoyed our conversation, and this is all extemporaneous, so we don't have any rehearsed questions or anything. I think that what's most germane in my background for venture investing is I did spend some time on Wall Street with Dominic and Dominic, and also researching and evaluating the top investment traders at that period of time, and coming to understand alpha and figuring that out, and how that's really judged to be effective or not in terms of establishing portfolios. And then after that, I also ended up running and creating some investment funds myself, and running some offshore hedge funds, and then also worked with Chase on the first $1 billion bond fund and raising LPs, and understanding that dynamic, and did a lot of LP work. So, from that sort of professional background, I started angel investing, and I have my own fund, which is, I'm a small ticket guy. I wouldn't compare myself to any venture capital firm out there. But in terms of the dynamics and the heuristics and the principles, I think they still play out. And so, your Kelly criterion could be very high or very low, irrespective of the size of the ticket that you write. And it's just, total return and distributed profits are sort of the end of the day. So from that perspective, I was then very much interested in founders and in ventures themselves being the asset of interest, and started working with them. I did a couple of things. One was to design and bring to market the largest venture challenge for venture teams, everything from ideation to scale. And we were in 100 countries. We had about 6,000 venture teams, and my responsibility in designing the challenge was to figure out a way to help these teams sort of self-actuate and express high quality execution in what they were doing wherever they were, and provision them with the frameworks and tools that would enable that to happen. And so along the way, what I had originally sort of come to take as a thesis on Wall Street was a sort of a simple principle, which is that the more value you create for others, the more you can capture that value on balance sheet. So really the whole game for successful investing in business is looking for value creation, and looking at that conceit, obviously, through the lens of future value, right? If it's already, all the value is already here, then it's discounted to market. There's no real ROI. So it's sort of how do you pierce the veil of time and uncertainty and chaos so that your alpha can manifest in being a best filter and pick those with the highest probability for future value. And so that sort of fell into my lap in the sense of designing these tools for founders and their venture teams so that they could start to better clarify, reveal, align, and attract resources for value creation for all their stakeholders. And from that composite view, actually have what I would consider to be a much higher probability for pulling that off and being a successful investment. So it seemed to work on both sides of the table. It helped strengthen portfolio alpha for private equity, but it also helped and accelerate and increase the value, or excuse me, the quality of execution for operators. And so that's what my firm does. It's called Social Wealth Partners, create social wealth, make private wealth. We've been doing and working around in this sort of philosophy and frame since the early 2000s.
Should I go for cracking the wealth code at first, become a trillionaire, and then redistribute, or go 80% wealth with a 20% social base?
I'm going to be irritating here because I think we've lost the plot, and I think if you're building a business and if your core business model isn't about creating value for all your stakeholders, then it's not a good business. It's a shitty business. And it's even shittier. I apologize. Can I cuss on this? Forgive me. Wall Street. Yeah. See, when I start thinking about Wall Street, I remember when I was talking.
You can't say shit on this podcast. You can't even say fuck.
I'll say caca. So anyway, I think it's a terrible business model that only gets worse when you start then, amalgamating and adding on this another component to do good. Now you're mediocre in two businesses. If you want to just be a charity and do that. And if you want to just, to make money, then make money. But the principle behind making money is creating value. And if you have any kind of concept that there is more value to be created beyond my customer on a transactional basis, then you're going to kill it in the marketplace. If you can extend that concept to looking at creating value for your investors, for your team, for your partners, for your supportive communities, your success 50x or whatever is inevitable. I mean, who doesn't want more aligned investors in their cap table? Oversubscribing. Who doesn't want high quality talent in early stage at a discount to their market rate, right? Who doesn't want partners that increase, the probability of your success by cramming down costs and increasing the quality of execution, right? So all of these things are within reach, but they're just ignored. And it's not like people aren't, smart enough. Everybody's smart enough to do it. We're just not doing it. And the narrative and the plot of all of this social impact, I spent a good deal of time after Wall Street working at a charitable think tank, working with foundations, governments, and not-for-profits, and helping them improve their business models so that they would get outcomes for the people they were hoping to serve, and do that in a highly ROI manner, which means that it would cost them less, the quality was better, they compress time cycles. And what happens is that the narrative around that activity is somehow obstructed by some legacy language about it's not right to think in business terms when you're dealing with charitable intentions. And to a certain extent, they get a free pass because we have corrupted what business is. And this goes back to my point. It's not social, Wealth of Nations was not the initial credo for capitalism. It was theory of moral sentiments, which was capital was created to distribute wealth, not to concentrate it. So I give people a pass because when we see current, cases of, financial success, they are with a level of corruptibility that nobody wants to replicate, right? And it puts a strong tension. We just want to get divorced and away from it. And it's a sadness because, people like Yvon Chouinard at Patagonia has shown how to do it. Ray Anderson at Interface. I mean, there's a lot of people who have done it, but they don't get the limelight. They don't get the attribution that results in modeling behaviors after that and more to the level that we should. I think they certainly are getting some level, but it could be a much more significant. And we would see principles that would be coming down in terms of business of like saying, okay, it's not like your burden is to solve a problem. Your burden is to create wealth. If that happens to solve a problem, great. But if you just go around looking for problems to solve, you're not really going to get very far. You're going to be one of those survivorship bias ones who get it lucky, and your story is going to float up the flagpole because it conforms to the narrative. But the reality is, there's thousands of ventures out there that don't make it trying to solve a problem. But everyone that creates value does make it. They may not be a 50x or 100x, but they'll be a viable business.
And what
So
do you do once you make a fortune? What's the game plan here? Because, you know, me, I picture the Wall Street guys just going to these charities, 1 million, 1.5, and just like trying to outbet the other just for egotistic
yeah,
reasons, spending their money dumb, you know,
yeah,
like not investing in charities that are worth it, not
yeah.
evaluating them the way they evaluate stocks. So what do you do once you have the billions?
What do I want to have the billions
What
doing?
do you do once you have the billions?
Oh, once you have the
Say that
billions.
I cracked the capitalist code,
Yeah, I
right?
mean,
Which is
look, we're all here for different reasons. I don't ever want to feel like I have a prescription for somebody else how to run a life. God bless them and all their wealth, and may God bless with me with as much as and more. But the reality is that if you are in some alignment with actually mastering investments, then there are I think there are pretty clear parameters by how you judge that mastery, right? So if you're trying to improve social metrics and baselines and everything else, then your success is going to be pretty easy to determine because those baselines are going to move. So if you're failing at that, just the fact that you're kicking money out of the back of the car and you're glad handing and having a wonderful champagne, soiree, as much as that feels good and maybe sounds nice and strokes the ego, but if homelessness is still increasing, if obesity and diabetes is still increasing and you're shoveling shekels at it, I don't think you're a very good investor. That's the bottom line. And you can't tell me anybody in the private equity space who would say, well, we spent all of our last fund and we didn't get any return on investment. Let's do it again. I can't imagine anybody having even a logical, fantasy at that level. So
right.
why should we surrender common sense, good business acumen, proven principles when we're trying to achieve something of merit? And that's just simply, if you're creating value for someone, like I tell people, Google and Facebook are the most successful not-for-profits ever because their business models are not-for-profit. I give our users value for free. Their life is better. And these people over here pay me. That is a not-for-profit business model. That's a government model, right? Where people give away services for free and create value and then get rewarded somewhere else. For not-for-profits, it's typically government contracts and foundations and individual donors, right? For Google and Facebook, it's typically advertisers, right? So the model is the same. Making it work is the same challenge, but people surrender clarity. They're not very objective in terms of how they measure their success because they want it only to be based on outputs and not about value creation for others. And, and that's where we are. So, how many of these, in the heady days of VC, how many companies, were rewarded for running deficit spending and having no cash flow whatsoever, and all in the hopes of becoming an Amazon, which I don't know how long it took before they were cash flow positive and profitable. But sure, you can do that model. You can continue to try to bid up a model based upon sort of a proxy for value creation. But I think it's much easier just to start with value creation.
What about folks like the Wolf of Wall Street and Sam Bankman-Fried that was a proponent of effective altruism? Where did they took a fork in the road that led them in the wrong direction?
I don't know too much about the story there. You hear second, third, fourth hand. It doesn't seem to be very favorable. There seems to be a lot of darkness around it. So it's hard for me to, where does any sort of movement go wrong? And it's usually when the ego of the leaders start to take the place of the mission, right? So that's just a plain vanilla answer for most movements, most sort of cults that go bad, most multi-level marketing that goes sideways. Whatever it might be, is if you don't fulfill on the original promise of what people signed up for, then there's usually a huge reckoning and it doesn't end well.
Right. It's vanilla, but it's full of wisdom too, because if, I mean, we all think we're like super good and super gifted, but, and even if we are, you cannot build something scalable with like no community backend. At least have a council of elders to keep you in check, you know, because you,
Yeah,
humans are even destructive to themselves. I mean, it's, do I even need to mention that? Like, we destroy ourselves all the time, you know, and you need people to
a-
keep you in check.
absolutely. I think that the number one reason of mortality for ventures is team fracture. And I think what is not explored enough, and I don't have any stats for it, but I think that, mental health is a huge burden on operators. And, they are often, isolated and put into a situation where, you know, any any signal of weakness is immediately looked at as a threat to ROI. And so, it just compounds itself. And I think, those are structural problems. They can be worked out. And I don't think, I don't think anybody enters into this industry in this game with the perspective of trying to be a bad person. I really don't. I give everybody credit for trying to be a good person. And I think then they look around for the tools that they find most useful or familiar. Oftentimes it's more of the familiar tools rather than the useful ones. And then they try to do their best. And sometimes that works out and sometimes it doesn't. So I think that, as long as we're all open to learn, we should, and my sort of core background is really on the innovation frontier, that all of this is driven by, hey, how do you create more and more value? So I think we should always be opening to learn, how can we improve, how can we make this a little bit better? But then understanding the parameters of what better looks like with agency from the stakeholders you're talking to. And that's the problem. So I mean, I don't necessarily need empathy. I don't need to identify and become a stakeholder. I simply just need to get to a place where it's congruent with what I'm saying and what they're expecting, and that it's a better option than their status quo. And that surprisingly is not very hard. I mean, I did about, all of these infrastructure projects when I did the charitable think tank in rural communities, set up 16 public-private partnerships. And in the beginning, I would go to all these projects and I would tell people, look, I'm not from here. I don't, I have clean drinking water at home, my toilet flushes, and I am not going to live here and be one of you, but I will help you because I know how this can work for you if you want it. And that just eliminated all of that sort of like, how long do we have to hang out with each other and get to know each other? It's just sort of like, look, I'm not here to get to know you. I'm here to help you get what you want. And I'm pretty good at it. So why don't we figure out if we like each other in the process of getting you what you want? And that was a very easy and fast recipe. And the residents got it the quickest. I spent more time working with governments at the state level and local level and helping them kind of understand why this type of approach has been so successful and would be great for them. And eventually we did. And so state governments became my exit partner. Otherwise I'd still be doing it. So that worked out okay. But again, clarity on stakeholder value creation is what drives all value in terms of ROI. And it doesn't matter if you have a what's that group's, you would just say the Bankman Fried's group?
Yeah, the SBF, FTX,
Yeah.
yeah.
No, I mean,
Oh, effective altruism. Effective altruism. I think the connection
yeah,
lag there.
yeah. It doesn't matter what you label or call yourself or intend. What matters is how quickly you can get the clarity of that value underneath the label. That's really it. And when you can do that and characterize that in terms of what others are gaining, that's 80 to 90% of the job.
Yeah.
Because the rest is just showing up.
Right. I agree with that. Effective altruism, by the way, had a great reputation prior to Sam, and I think they're still gonna survive. Let's do a round two because we
need more of that. I mean, I don't want to poo-poo it at all. You asked me about how did it go sideways. I mean, I don't know, but
yeah.
But yeah, I mean, I think we need more people showing up with words that shows that they care, and then figure out how to animate those words into real value for the people that they care about helping.
Is effective altruism gone wrong for those that didn't know? It was Altman saying that, yo, I'm just gonna make however much money as possible in whatever way possible. and impact negatively, even potentially impact negatively people. That is, if I can make $1 trillion on the upside and redistribute it to folks. So more on that later. Neat run on my side, but it's been cool, and I want to do a round two because I feel we haven't even scratched the surface yet. Where can people find out more about you, Rob?
I have it's almost a cobweb site, socialwealthpartners.org. That's all one word. So and I don't know if you want to sort of drop in an email or anything here, but I'd be happy to share my email, and then people can reach out. I'm on LinkedIn, Rob Hanna, the good looking guy. No, I'm just kidding.
Betty Hanna, easy
yeah.
to remember.
Yeah,
I love Betty Hanna, by the way. Need to go.
Right. And it's Hanna, Hanna, not a palindrome. But sure, I'd love to be helpful to anybody who's interested in creating value for others, without a doubt.
Thank you. I am Charles, founder, host of VC Wisdom podcast, and that was Rob Hanna. If you want to start scale, be invited to podcasts and even get sponsors, that would be podbuyer.com.